Hello everyone. Welcome to another video of the monthly analysis of Indian share market. In this video, I am going to share my analysis of the Indian share market's performance for the just concluded month of July 2025. I am going to share my commentary on these 7 points. Headlines of the month. Second is the key market indices performance. Next is the sector's performance. Next would be the IPO and other market activities. Then we'll see the gold, silver, currency and oil prices. Then we'll check out the top 10 global economies performance in the month of July, and then we'll see the future outlook and then conclude the video. So let's see each of these points in some detail. Before moving on, please read the entire disclaimer carefully. So let's start with the headlines of the month. For the Indian market, NSE trading accounts crossed 23 crore marks. Now, this indicates a robust retail participation. So, this is the first time that we have crossed 23 crore mark. That means the retail investors are entering the Indian share market quite quickly. So, which is a good point, I think. Next is the Q1 financial year 26 results of the companies have started coming out, and they are not too good, to say the least. And there is significant impact on the sectoral performance, which we'll see in a couple of minutes from now. So let's see. Still, we have a lot of companies whose results are yet to be declared, but so far, not much encouraging. Next is the commodity prices see a volatility and which impacts the input cost for industries. Metals like gold, silver, copper, we have seen volatility across the board in all the commodities. So it's impacting the industry significantly. Next is the weakening rupee. So rupee has depreciated significantly in the month of July. Again, this is something which we'll see in a couple of minutes. And next is the FIs. So FIs after few months are net sellers from the Indian share market equity segment in the month of July. So again, we'll see the data in couple of minutes time. Let's see the headlines of the international market. So although we are struggling, the US stock market is continuously making new highs, and S&P and Nasdaq both has hit um, all-time high several times now. Probably, I guess in the last few days, each day they are making a new high. Then U.S. Federal Reserves holds rate steady. So there was expectation that the Fed would give some hint about the rate cut, but there is very little hope for the September rate cut now. And another significant development, U.S. President has imposed 25% tariffs plus penalty on India. And we both of our nations are supposedly friends anyways. China's Q2 GDP, now this is very significant in terms of the overall power center of the world. Q2 GDP of China has exceeded expectations. Now this is something to watch out for. China's GDP is huge, and now they are performing it and they are showing the data to the rest of the world. That is something to keep an eye out for. And the last international news is that the European markets see some modest gains because of the recent trade deals with the USA. And the economic signals but are still mixed. So there is no clear directions even after a trade deal. Let's move on and see the key market indices performance. Now, this graph shows the top five broader indices of the Indian share market: Nifty 50, Nifty Next 50, Nifty Mid Cap 100, Nifty Small Cap 250, and Nifty 500. As you can see, all of them has given negative returns in July. Nifty 50 with minus 2.77, Nifty Next 50 with minus 2.61, Nifty Mid Cap with minus 3.82, Nifty Small Cap with minus 3.57, and Nifty 500 with minus 2.83. So, an extremely bad month for the Indian share market. Let's move on and see the sectoral performances. So, this graph shows the sector's performance, and by looking at this graph, the first look itself is more than enough. As you can clearly see, there are only two sectors which have given positive returns in the month of July. First is the pharma sector, and the other one is the FMCG sector. Pharma with 3.63% returns, and FMCG with 1.76% returns. All other sectors have given significant negative returns in July, with defense being the worst hit with minus 12.32% returns, followed by IT with minus 9.07%, capital market with minus 8.12%, and realty and media with around more than negative 7%. So, extremely bad month. It is clear that July was an extremely bad month for the entire share market of India. Let's move on and see the IPO and other market activities. So, on main board, 14 IPOs opened up for subscription, 13 were listed, and in SME section, 24 opened up for subscription and 31 were listed in July. In OFS, Indo Solar Limited again bring OFS, so they brought an OFS in June. They brought another OFS in July as well, and Eastern Silk Industries Limited also uh, brought a OFS in July. Now, there are few important and critical SEBI's action that took place in July. First was the crackdown on misleading stock tips and front running. This is called as the Z business case. SEBI took significant action on 28th of July against 13 entities which were linked to guest experts on Z Business. Z Business is the most popular business channel on the TV in India. These experts allegedly share advanced stock recommendations privately with connected traders before airing, following allowing for front running and wrongful gains of more than 7 crores, 7.41 crore approximately. SEBI settled with 10 entities and barred 4 individuals from accessing the market, reinforcing strict rules against fraudulent trade practices and market manipulation, especially regarding financial influencers and public communication in securities market. Next was the extension of algo trading deadline for retail safety. So initially uh, the initial deadline has been moved up to 1st of January 2026. Third action was the mechanism for monitoring minimum investment threshold under SIF. So as of date, there is no SIF which has yet been launched, but SEBI is taking steps from its side to uh, safeguard the investors as well as improving the transparency. And they have laid down a mechanism to monitor the minimum investment threshold of 10 lakh rupees, which SIF has. And there are provisions that they are making like a notice of 30-day period notice to replace investment and all those sorts. Fourth is the relaxation of NRI derivatives trading rule. Now, this is quite important because basically, with this, the SEBI is trying to bring NRIs on board and trying to lure them into the basically Indian share market to invest in Indian share market. So this is a attempt to bring the foreign money into the Indian share market. Okay, and then miscellaneous. So FIIs were net sellers, as I said, in the equity segment in July with minus 18,570 crore rupees, and DIIs were again net buyers with 44,328 crore rupees. So I would say it's the retail users because DIIs mostly the money came from the retail investors through mutual fund SIPs or all those things. They are holding the fort. Otherwise, I don't know where would we be. Mutual fund SIPs reached a record high with 27,269 crores in July, and the Bitcoin keep on rising, and the Bitcoin price at the end of July was 1 crore 1 lakh 30,942 rupees. Outstanding. Let's move on and see the gold, silver, USD to INR, and oil prices in July. Start with the gold. So gold experienced consolidation and closed at around 1 lakh for 24 carat gold for 10 grams. It reached a high of around 1 lakh 2,400 on 23rd of July and a low of 98,000. Silver has shown a strong upward trend and closed at around 1,15,000 per kg. It reached to around 1,19,000 on 23rd of July and a low of 1,09,000 somewhere in July. Currency exchange rates, notable depreciation in rupee. Now, 1 USD is 87.65 at the close of the month. It highest it reached was 87.7 and the lowest was around 85 rupees on 4th of July. So very bad month for INR. Finally, for the oil, it's shown some upward trajectory and Brent was the highest price was $72.83 per barrel and the lowest was 66.34. For WTI, the highest was $70.51 per barrel and the lowest was $65. Let's move on and see the performance of the top 10 global economies in the July. So this graph shows that, and the first look itself suggests that India and Brazil were the only two countries in the top 10 which gave negative returns in July. So it is easy to say that the developing nations are suffering and the developed nations are rising, except China. And I do not consider China like developing now. They are more than developing. But, anyways, UK performed the best with 4.29% returns over here. And China did very well as well with 3.74% results, and all Italy with 3%, and all others follow suit. India and Brazil were worst hit. India with minus 2.93% and Brazil with minus 4.17% returns. So that's all we have seen. Now let's see the future outlook. What to look out for the month of August. So there are six key factors and trends to watch out in August. First is the US India trade tensions and tariffs. A significant development in July was that 25% tariff was imposed by the US on Indian imports, which is effective from today, that is 1st of August. This is a major concern as the US is India's largest trading partner. There is also an unspecified penalty related to India's energy and military imports from Russia, which could add to this uncertainty in August. Next is the RBI Monetary Policy Committee MPC meeting. The RBI's MPC is scheduled to meet from 4th to 6th of August. While inflation has eased significantly, as per CPI at 2.1% in June 2025, and the RBI has already cut the repo rate by 100 BPS this year, the central bank may choose to pause further rate cuts in August. Third point would be the inflation data of both India as well as from US. So they are both set to release their data on 12th of August. While India's inflation has been on a downward trend, any unexpected spike could influence the RBI's future policy decisions and market sentiment. Whereas global inflation trends, particularly in the USA, can also impact foreign institutional investor sentiment towards emerging markets like India. Next factor would be the monsoon performance. The Indian Meteorological Department, that is the IMD, has forecasted above normal rainfall, that is 106%, for August and September, which is crucial for the Kharif cropping season. A robust monsoon is positive for agricultural output, rural incomes, and can help stabilize food prices, thereby easing inflation pressures. Next point would be the corporate earnings and sectoral performance. Many companies will continue to release their Q1 financial year 26 earnings for the April to June quarter in August. While overall Q1 revenue growth has been muted, 4 to 6%, say, sectors like pharmaceuticals, telecom services, organized retail, aluminium, and airlines have shown stronger performance. Investors will be closely watching these results for insights into the corporate health and future outlook. And final point is the global market trends and the FII's flow. Global economic slowdown concerns, especially in the USA, could continue to weigh on the market sentiment. FIs have been a net sellers in the month of July. Their investment patterns will be closely watched as significant outflows can put pressure on the Indian market. So, in summary, August is expected to be a volatile month, heavily influenced by the US new tariffs, the RBI's monetary policy stance, inflation data, and the progress of the monsoon. Investors should remain cautious and keep a close eye on these macroeconomics and geopolitical developments. And finally, to conclude, July was a challenging month for the Indian share market, with major indices like Nifty and the Sensex declining close to 3%. This downturn was primarily driven by significant selling from FIIs, concerns over the new US tariffs on Indian imports, and muted quarterly results, despite strong buying support from the DIIs. That is all from my side in this video. Thanks for watching it. Please like, comment, share, and subscribe. Goodbye for now and happy investing.